Here I do financial literacy videos, vlogs, journal with me's, and book reviews. So if that's interesting to you, please consider subscribing and joining my little club here. I'll figure out a name one of these days. Today, as you can see in the title, the title will be down here. Today we're talking about high yield savings accounts. And every time someone's giving financial advice on the internet, they are constantly saying they do not put their money in a regular savings account. They use an HYSA. And sometimes you'll be like, what is that? And basically, very simply, it is just a bank account. It's just a savings bank account. It's usually FDIC insured, even if it's like from a online financial service that is partnering with the bank, it's insured through that bank. And the whole point of a high yield savings account is exactly in the title. It's just a savings account that has a larger interest rate. Most of them are from 3 to 5% these days. And by these days, I mean like this year, because a high yield savings account, just like any savings account, anything with a rate is due to change unless you look for a fixed or a locked in rate, because most of them are standard variable. If you want something that's not going to change, you have to look for something that's a locked in rate. But most of the times I have seen that a high yield savings situation, whether it be an actual just high yield savings account or it's like a CD or something like that, especially if it's a CD. The pro and the con of having something like a CD is because those fixed rates are for a certain term of time. And it's good because you could possibly be getting a higher interest rate and it stays that way. It's not going to go up and down like a high yield savings account has the vulnerability to rate, but it might be beneficial, and it also might be not that beneficial, because while your money is locked in for the term, for the length of time that it's locked in, you could have the rates go up, like the interest rates go up. Catch-22, but it's not a bad one, because either way, when you lock in at a certain percentage, it is generally much higher than the average savings account interest yield. And then the standard, which is variable rates that can change at any time. So you can open a high yield savings account at, say, 4.3%, and then over time it becomes 3.7, and then it's 3.1, and then it's 2.9, and then it's 5.6, and then it's 1.2, and then it's 5.7. Like, it's variable. It's not that volatile, but you get what I'm saying. So it can change, but over the course of lifetime, or the lifetime of your account, which might not be your whole life, but for the lifetime of the account, it does generate a lot more interest. And speaking of interest, compounding interest is something you do want to look for when looking for a high yield savings account. It depends, again, on what you care about. The difference between compounding and just a regular interest rate in your APY, which is annual percentage yield, which means, the annual percentage that you will be yielding from this account. When you are getting interest, most of the time it is strictly on the balance. Say you put in $100, because a lot of these accounts also don't have a minimum balance, either to stave off a monthly fee, so they have like no monthly fees, or a minimum balance to open. A lot of things don't have a minimum balance, but a lot of them do. It's really a toss-up, but I've seen more and more without a minimum balance, and I think it's because they're competing with the online financial servicing apps who are partnering with banks, and because they don't have like a brick and mortar all over the country or whatever to service or pay for, they can offer higher rates and stuff. Like, that's their niche. But anyway, a regular interest, it only goes on to the principal balance. So again, the principal balance is, say that you open the account and put in $100. That is your principal balance. And if you add $10 more, your principal balance is $110. Now, say between when you opened it with 100 and you added the 10, you got your interest rate. And say they pay interest monthly, which Most bank accounts pay their interest monthly. Some do daily. I've seen that. Not often, but anyway, like say you did 100 and then it's been a month and your bank does monthly interest and say it's at 4%. So you'll get $4 and it'll be $104, and then you add 10 after that interest comes in. The next month you'll have $110. That's your balance. That $4 that's there. So your whole balance is 114, but your principal balance is only 110 because that is the money that you physically put in the deposit account. So you added it to your balance. That 4% that got paid to you doesn't count. Now, if you do a compounding interest, the 4% counts. So instead of getting interest the next month on $110, you would get interest on $114 because compounded interest always includes the interest that you earned. So a lot of people opt for compound interest rates because you earn money on the money you earn instead of just earning money on the money you put. That's that factor. I wrote some notes as usual. Okay, so barriers. Barriers often include credit and banking credit mostly, and the initial required amount. Some things can be as high as like $5,000 or $1,000. Some are at zero, and I mean like the entry fee to get this high yield savings account. So just look, because again, like I said in a previous video, you don't know unless you try. Even with the whole thing with the barrier being banking credit and your regular credit, maybe you don't have the best regular credit, or you have a couple banks that you owe money to, like maybe they're in the negative right now and they're threatening to close them, or if they've already been closed because you owed them money, stuff like that. Those things can affect your ability to get another account, checking or savings. It's not just because it's a high yield savings. It's like any savings. I would say if you're looking at a certain bank and it's like a traditional bank, and then I would say try first. The worst they could say is no. It's not like it dings your credit. Okay, it checks the credit, but it doesn't ding your credit. But credit cards do, but opening bank accounts don't. But they do check credit, and they do check your banking history credit. That's what makes up part of your banking credit. Like is this person, a person that will cost the bank money? That's basically what they're looking at. And what they mean is, do they have like accounts that are unpaid? Has it been a long time? Honestly, if your account closed a very long time ago, you have a higher chance of it not affecting your ability to open another account. Or if the bank closed the account very recently, you have a chance that it won't affect you from opening another account. However, that's not a guarantee. I'm just saying, try it. I'm saying all this so that you don't feel like, oh no, I can't go do it because my Wachovia account was closed 20 years ago, or my Wells Fargo account closed 6 months ago because I owed them money. Like I went into negative because of overdraft fees, and now I won't be able to get a bank account anywhere else. Just try. If it doesn't work on the traditional side, you can always look into the online financial institutions. Some of them are banks. Some of them are partnered with banks. So like I said, it's still insured, and you might have a easier time in the entry to that. It might, because I've seen some people get rejected from those too, or well, at least they told me. And I've also been rejected at a certain point in time. I got rejected from some online banks because I had to go settle everything first. So it was a long time ago, but still relevant because the system hasn't changed. Yes, those are some barriers to entry, but they're not actual barriers. I say they're barriers to entry because those are things that can actually stop you from getting the account. However, I don't think they're things that are detrimental enough to not try over. They're things that they're either going to say yes or no, and you have to find out sometime. So just go and try. Oh, right. And then the whole minimum balance thing might be a barrier as well. So like I said, a lot right now, I think they're competing with each other, so they don't have as many minimum balances for these high yield savings accounts. There's a lot of them are at zero or like $1 or something like that. So just look, look for the one that will fit your actual budget. Like, say you want a high yield savings account, but you don't have any money to put into it right away, but like maybe in a month's time you'll have $100, $200 to put in there, and then you want to add to it, slowly. I would say that's the best bet. Look for something with a zero minimum balance, not just for entry, but for keeping your service fees. Because a lot of times you can have a minimum of zero to enter, get the bank account, open it. You don't have to use any money to open it, but in order to keep it fee free, you have to have a balance of like $300 or something, or $250 or $500 or $1,000 or something like that. So that's how they get you on the back end. You want to make sure, if you're someone who knows you don't want to be paying those fees every month because it's going to be eating into your savings, you want to make sure it's something that doesn't have a minimum balance requirement for fee-free account, okay? Always make sure you look for that. It's not a breaker for everybody, especially if maybe the rates is higher than anything you've ever seen before. I think the highest I've seen right now is like 5.3, or 5.6, something like that. That's the highest I've seen. That doesn't mean it's the highest, but it's the highest I've seen. And it's from like banks I've never even heard of. So like, there's options out here. There are so many options. You don't only have to think about the ones that However, most of the time you want to look for ones where you have access to them in some capacities, whether it be online or it's a bank local in your area, so that you can get to it. You know what I mean? Because you need accessibility for these. Now, if you're looking to earn a bit of money while you save money, a high yield savings account is what you want to lean towards, because it gives you a little more money than a regular savings account. High yield savings accounts are not the best for long-term growth of your money in a way that you would think of investments. It's just a better way to save money because it gives you money to do so. That's why it's a better way. But there's all ways to save money are great ways to save money. But it does not give you as much money as, say, investments. So a high yield savings account isn't really an investment. It's somewhere to earn money while keeping your money liquid, which is very important. Having liquid assets is very important. Accessibility to your funds is very important, okay? Because you never know what can happen. So those kinds of accounts are good for accessibility that's going to be earning a bit of money. The last point I'm going to make here, let me double back and talk about APY, with annual percentage yields, and the variable. Remember, earlier I was talking about variable and fixed rates, or like locked in rates, and I brought up CDs, which is not a high yield savings account. It's a CD, which is a certificate of deposit. It's an entirely different type of account, right? I'm gonna read it to you. Now, can APY change? And I said yes, it can change whenever. Also depends on if the Federal Reserve decides to cut or raise rates in response to recession or inflation in the economy. And so one thing when I was younger that used to confuse me a lot is why the feds were always raising and cutting rates, and everyone always just said the same thing, and it wasn't making any sense. Why do they do it? People are like, because it's to curb inflation, it's to battle the recession. And I'm like, how? Right? If the Fed cuts rates, then you will see banks, I'm saying this in terms of why your rates will be variable. If the Federal Reserve cuts rates, then you will see banks lower loan rates and increase savings rates. Like a high yield savings account, they'll give you the option, they'll have higher percentage rates. The opposite if the feds raise rates. Why? Because if the Fed makes rates lower, it costs the bank less to lend money to borrowers. It's made so that people will actually spend more money and inject life and circulation back into the financial ecosystem. If the feds raise rates, it's because they are trying to curb the amount of money being paid out by loans and interest rates by increasing the barrier to entry. This causes demand to fall and in turn is supposed to soften or at least temporarily stifle prices from raising and raising due to so-called demand. Oh, from raising and raising due to so-called demand in a hot and greedy market. That is my definition. That's how I want to explain that to you. All right. So I hope I explained something about high yield high yield savings accounts today, and I hope all the surrounding information around it has helped you, because it's not enough to just say what a high yield savings account is and just tell people to go get one. It's I want to make this, the reason why this is part of financial literacy is so that you can better understand what the purpose of it is and like decide for yourself if you feel like it's necessary. Like maybe you don't care, you know what I mean? Like it's not that necessary, but maybe you do care. Maybe you're like, yeah, that $4 on my 100 could help me, you know what I mean? Like this is something that needs to be explained, and I hope I explained it. And if you have any more questions, please drop them below about high yield savings rates in general. Again, I put a disclaimer in the description box now because I'm not giving specific advice. I'm giving general knowledge and general advice to help you make your own informed decisions, or maybe even convince you into getting a financial advisor. It doesn't matter how much money you have. Everyone can use a financial advisor. The whole trick is finding a financial advisor that cares about you in your financial stage, whatever that is, because you do have some that are more wealth based, and then you have some that are more career based, as in they are financial advisors for a certain industry. So for people with certain kinds of jobs, because they have different needs, you can find someone like that. You can find someone who's more wealth based, and that doesn't mean someone who only looks at someone with lots of money, but they're a financial advisor that their whole goal is to help you create wealth. And maybe that's not your goal, so that won't align with you properly. You want to find a financial advisor that is right for you. You have some that are more focused on family and planning and growth and retirement, So just look for a financial advisor or a financial firm that aligns with the kind of lifestyle you want to live, and they would be able to give you more tailored and like specific advice, because they're sitting down with you. They know what you want. They're going through your books. This right here, the advice I give on this channel is just general advice so that you can make informed decisions on your own and keep your mind open, because I think a lot of financial advice, when I used to look at it, it used to make me feel really excluded. Like it just made me feel like I'll never be able to do those things, until I started working in the financial industry and learning a lot more, getting my financial literacy expanded or increased. It opened a lot of doors in my mind, which in turn opened a lot of doors in real life, because I no longer put those barriers on myself. I just saw barriers as matter of fact. So like earlier when I was talking about barriers to the high yield savings account, they're barriers because it might stop you, but now that you know that those are things that can happen, you don't have to be afraid. You can confront it knowing that, okay, I know that I owed a bank some money once and that might stop me from getting the account, but let me just see, instead of just being like, oh no, but I won't be able to get that account. You don't know. You don't know until you try. So yeah. And then you could be thinking you're missing out on something huge because you can't get this account. And I've just explained to you that the account, while beneficial, it's not like a life breaker. It's not going to you pen your life if you don't have one. A regular savings account could work just fine. A shoebox could work just fine. But what could work more efficiently, a little better, if you're trying to earn more money on the money you save, it could be a high yield savings account. Okay? But all things are valid for different stages in your life and what you're able to do. Because if you can't get the account, you can't get it. That doesn't mean you shouldn't save any money the way that you can. And then work your way up, if you want that, to getting that. And I don't want to say work your way up. I'll say work your way over, right? Because it's not a vertical thing where something's higher than the other, even though it's called a high yield savings account. It's high yield because it's a high number, okay, in comparison to the standard numbers. It's like a lateral move, you know. You're saving this way and then you start saving over there. It's not like that. I don't want you to think of it like a hierarchy of savings. It's a lateral move depending on your lifestyle, where you are in life, what you want to do with your money. All right? So go out there and make informed decisions. Sorry, I clapped right next to that microphone. Bye. Well, maybe I'll call us kids in the hall. After school club? Detention? This shouldn't be detention. I don't want to call this detention. Nobody liked detention. Sometimes detention was fun, though. I think detention was more fun in high school. Actually, no. Detention was more fun in grade school because you got to go in the library and I would read books. So that's why I would call it detention, because I immediately associate detention with the library, the school library, and having to sit there quietly and read books, which was great for me. So anyway, yeah. I'll think of a name, I swear. Bye.